In today's video, have we officially entered a buyer's market within the Toronto/GTA real estate market? Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. Before we get into the point of today's video, you can find my contact information with regards to my office and my email, where you can get in touch with me in the description box and on the screen as well. Feel free to also go find me on Instagram as well. Don't forget to do that, where you get to see what I've sold, what I've bought, and a lot more on there as well. Lastly, as always, before you get in touch with me, if you want to do a little bit of your own homework, feel free to just Google my name, go through my Google reviews. Anyways, enough of all that. Let's get to the point of today's video, which is tackling the question, have we officially entered into a buyer's market? Let us first define what a buyer's market is. In my professional opinion, there are typically 4 to 5 conditions and trends that need to be in place for us to deem a certain market a buyer's market or a more buyer-friendly market. Number one, and probably the most distinguishing factor for a buyer's market, is when there is more inventory than there is demand. So in other words put, more homes available for sale than there are buyers involved in the market. Number two, typically in buyers markets, prices tend to be lower as a result of that very aforementioned point, where the inventory is more than the demand, in effect creating competition amongst the ample inventory, sellers competing against one another for not enough buyers, as a result kind of diminishing the prices. Another common attribute of a buyer's market is when homes sit on the market for a longer period of time. And lastly, another common attribute slash condition of a buyer's market is when the buyer has far more leverage than a moderate market or a seller's market, wherein the buyer can use this leverage with their real estate agent to negotiate a more favorable contract slash deal. So let's assess these one by one. Let's start with the fact that prices are lower. Now, year over year, they are still up when we compare April, May, January, February. However, when we compare April, which is the most recent month we have in full, to February, prices are down all over. I have gone through this in the past, but quickly repeating some information here for first-time viewers. In the suburbs, prices are down the most, anywhere from 7% to, in the case of Durham, 14%. Prices in Toronto are down a little bit less, with Toronto West actually being up marginally from February, but that is the sole exception. Toronto West is literally the only region within the GTA that is even marginally up. Everywhere else is in the red. Toronto East, Toronto Central is in the red, and of course Toronto overall is in the red. Prices are down from the highs of February and early March. So safe to say that condition is fulfilled. But once again, we have to be very specific about this. Year over year, prices are still up, but compared to the highs of February, first week or 2 weeks of March, prices are down substantially. Moving forward, are properties staying on the market for a longer period of time? Well, the answer to that is simply yes. Now, properties are not staying on the market by that much longer a period of time. In January and February, where the market was really hot, we were looking at anywhere from 7 to 8 days on average for properties to stay on the market across the GTA, across all areas. Of course, when we break down areas specifically, comparing Etobicoke to Durham to Newmarket, we're going to see different days on markets. But overall within the GTA, once again, we were looking at 7 to 8 days on market in January and February. Now into April, we're looking at probably 10 to 11 days on average across the GTA. So it's not as if properties are staying on the market for a demonstratively longer period of time, but days on market, the amount of time a given property stays on the market without selling, has been increased marginally and noticeably. And addressing the other condition that needs to be in place for it to be a buyer's market, in my professional opinion, buyer's leverage. Well, my most recent video was on this, where I went through that buyers in today's market more than ever have leverage and I see this from the numbers and from my experience as a real estate agent on a daily basis working with buyers to negotiate conditional offers. I see sold conditional listings more than ever on a daily basis when I go through the market for my buyers and sellers. And drawing further from my everyday business, I have negotiated more conditional offers for my buyers with 5-day home inspections and 5-day financing conditions in the last month, as opposed to early in the year, wherein as buyers, we had less room to negotiate for a conditional offer. So in my mind, both on the qualitative side and the quantitative side, it's safe to say that as of March, April, and now 15 days into May, buyers on a daily basis have more and more leverage to negotiate conditional and more favorable offers for themselves. Now let's get to the main point, the main condition that needs to be in place for it to be considered a buyer's market, which is listings versus sales. And I left this for last for a reason, because I created this chart. We see from this chart where I broke down January to the most recent month we have in full, which is April. This is being recorded May 15th. We see the number of listings that were available in any given month and the number of sales that occurred in any given month, and the difference between the two. Listings is designated by the blue bar, sales is designated by the red bar, and the difference is designated by the yellow bar. The market was really hot in January to start out the year. The inventory levels were at all-time lows. At the time, I talked about this extensively. We see only 7,900 listings. For that 7,900 listings, those 7,900 houses available for sale across the GTA, by the way, these numbers are across the GTA, we had about 5,600 sales. That is a really good sales to listing ratio for sellers. That's very good news for sellers, but for buyers, frankly speaking, not so good news, and it wasn't good news at the time, meaning for every available item of inventory on the market, it was far more likely to sell. Here we can reverse calculate and really simply say there was a lot of demand, but not enough inventory. In other words put, demand in January was much greater than supply. Well, into February, although inventory increased substantially, almost doubling, going from 7,900 to 14,000, sales grew as well, because in comparison to the 14,000 listings we had in February, we had about 9,000 sales. So there's no question the gap between the available inventory and the number of sales grew. Nonetheless, that difference is still a very seller-friendly difference. It was not as dire as it was in January, but this difference of about 5,000 between the available inventory and the amount of sales, in conjunction with the all-time high prices that occurred in February, because market conditions for most part peaked in February in terms of average sold prices, we can once again simply say February demand was much greater once again than supply. Well, into March, things become a little bit more gray. Things become a little bit more moderate. We see the difference of the unmoved inventory going from 2,000 in January to 5,000 in February. All of a sudden in March, the difference between the amount of inventory and the amount of sales grows to 9,000. And ending things into April, we see listings dip. We see listings dip by 2,000, going from 20,000 in March to 18,000 in April. But the difference between the amount of inventory and the number of sales that occurred, that does not dip. That actually increases, although marginally so. And of course, what happened from February to March is mainly due to the increase in interest rates. So in sharp contrast to what we have seen in January and February, for March and April, we can say that it is the opposite market conditions. It's not the case that demand is greater than supply. It's actually the opposite case, that supply is greater than demand. Now, the only difference between March and April is that in March, prices were, for certain areas, still higher than April. But into April, not only has the difference between the amount of listings and the amount of sales increased, but prices have diminished further as well, with the sole exception, as I said once again, of Toronto West. And in my professional opinion, and I think most of you would agree with me as well, this fulfills the last condition in place for us to deem this officially and formally a buyer's market. I might be a little bit early on that. I don't know what's going to happen in the future, but I anticipate that with another increase coming, most likely it's a very safe assumption to say that, in my opinion, this gap will widen a little bit more and prices will continue to drop a little bit more. Now, this is across all areas for all property types. As you know, on this channel, I always like to really get specific in terms of comparing condos from one area to another area, detached, semi-detached, and townhomes. Of course, when we break it down by property type and we break it down by region, we're gonna come up with different numbers. Some property types perform better, some areas perform worse, and everything in between. Anyways, let me know if you have any further questions. As always, feel free to subscribe, comment, rate, and review. Lastly, if you have any questions that you want me to cover on a future video, go on my community page on my channel, ask your question under the post there, and I will cover it in a future Toronto real estate Q&A video. Thank you very much for watching. Stay safe and stay tuned. Thank you.